My topic is titled 10 Mistakes Investing in Blockchain. So it's obviously a list of mistakes. And it's a pretty straightforward list, but it's really, really important. This list comes from my experience being the CEO of an investment firm that provides also both institutional and retail investments. We've seen a lot. We know why retail investors lose. We know what happens, what they need to be more careful of. So let's just go through the list. First mistake from the general mistakes, it's the biggest mistakes that retail investors are doing. They're actually risking more than they can afford to lose. When you risk more than you can afford to lose, when you're trading large amounts, when you trade your entire life savings, or when you're trading or investing, 10 years worth of working day in and day out, you will not be able to do well because in a market like blockchain, which is so volatile, you're just not going to be able to take it psychologically. No person on this planet can take it if you're just putting all of your life into one trade. So you need to be very careful about investing and trading funds that you can afford to lose that will not affect you psychologically. Second, being too emotional when you're trading or investing. It's about having a lot of greed, a lot of fear of missing out. These are the biggest emotions that affect traders. Greed is about not being able to take your profits. You make some money, but you keep on going at it. At some point, your investments don't go well. Fear of missing out is the market is going up. Cryptocurrencies is happening a lot. And you're waiting for the market to retrace so that you can get in, and it's going up and up and up and up. And at some point, you cannot take it anymore. You cannot just miss forever. So you put your money in the market. And that's how people bought Bitcoin at $20,000. And they bought in the dot-com bubble, etc., etc. I won't go into that. Third mistake, people don't have an actual strategy or a plan when they're investing. They don't know what they're doing actually. Are they investing? Everybody you're going to ask, they're going to tell you, yeah, I'm into it for 10 years. I'm backing a company or whatever. But when things get harder, they sell out their positions immediately or whatever. So you need to know: are you trading? Are you investing? What are you trying to accomplish? What is the edge that you have? What is your trading plan? You need to have one before you get in. If you don't have one, if you don't have a trading plan and you're sure about it, don't even go there. Don't invest on any market, not just crypto. Fourth mistake, there is no diversification. No matter, people need to understand that it doesn't matter what they're trading into. Even if you trade the most popular stock or the biggest company in the world, anything can happen in the world. Like a plane crashes, I don't know, the board of directors go down, stock falls like 70% the next day. So you need to be diversified. There is a lot of research on diversification, and the research has proven that you don't need to be diversified in hundreds and hundreds of instruments. Even 10 different instruments can give you the diversification that you need to avoid wiping out your account. 5 is a good starting point. 10 is like perfection. You don't need to go more than that, but obviously you're welcome to go more if you want. Last mistake on the general mistakes is people are trying to time the market. History has proven that the market is like extremely difficult to time the market. No one knows what's happening in big markets, either the stock market or the crypto market. When I'm saying about what's happening, I mean what's going to happen tomorrow or what's going to happen this week. This is timing the market. It's very difficult to know how the market is going to react to anything. So you need to have a more long-term investing approach. Now, those are like very, very important investment mistakes that people are making in general. Moving on to the cryptocurrency specific mistakes that people are doing. They don't understand the technology, so it's before you get into the whole crypto thing, take a moment to just read what is blockchain, why is it so beneficial, why is the world changing, what are cryptocurrencies trying to do, about the banking system and the new way of doing things, how do they work, what is a wallet, what is the difference of keeping your cryptocurrency in your wallet or the exchange, what is a ledger and how do you use it, this basic stuff. You need to understand the technology because cryptocurrencies are very, very, it's still very early for cryptocurrencies. So where I'm getting at is that it's a lot harder to invest in cryptocurrencies than just go to the stock market or something that has been around for 150 years, and you know what to expect. You know how to deposit your funds. You know how to find regulated brokers. You know how to take your profits and everything. With crypto, it's not that simple. Second, crypto-specific mistakes. The investors need to protect themselves from hacking, like it was mentioned previously. You protect your investments by securing them in a ledger or by having them in cold storage. You need to find out what cold storage is and how do you protect yourself. Most of the people who ever lost money in crypto like that they lost it because the exchange was hacked. So you really don't need. You shouldn't be keeping funds in the exchange, and certainly not all of your funds. So you need to find about cold storage and about ledgers and how to use these products. Third crypto-specific mistake is you're going to invest in some cryptocurrency, especially look, there are thousands and thousands of cryptocurrencies now, and okay, everybody knows that 80% of them, if not 90% of them, will not exist in 5 years from now. But still, people get into the fad, they read forums, some friend or a friend says something and you're trying to get into it. That's okay. It's like you really are like a venture capitalist looking into something new and, putting a small bet to make a big profit out of it. Make sure to read the white paper. Make sure to do your research, at least know what you're getting into very well, because if you read the white paper, if you really believe in this crypto, the blockchain product that you're investing, it's also going to help you psychologically more than everything else, because every swing of the market is not going to drive you crazy. You're going to know why you bought this particular blockchain, why you invested. So you're going to stay put and you're not going to be swinging with the markets. Fourth mistake is buying into all the fad. Like I said, crypto exchanges are not, generally cryptocurrencies are not regulated investment instruments, so everybody can say whatever he wants, tweet whatever they want, they can post on forums whatever they want. They can, there is a lot of fad out there. There's a lot of fake stuff. No cryptocurrency has the reporting obligations. All the numbers that you see might be fake. It's really difficult. So be very careful when buying into the fad. Do your research and cross-reference your research before you invest. And the last mistake when people are investing in crypto is they don't understand the asset. There are, let's talk about coins, for example. Coins are not really, they're not stocks. Coins do not give you ownership in something. They do not give you dividends in something. Just because you bought, for example, I don't know, Ripple or whatever, it doesn't mean that the Ripple company belongs to you or a part of it belongs to you or whatever. Coins are just the storage of value most of the time, and you're trying to buy into a new storage of value that you think will appreciate. Like you think that in the future it's going to be used a lot more, and people are going to will want to buy it more, so the price is going to become larger, and you're going to make some extra money. So it's really important to know what you're getting into. So those are the 10 mistakes.